Scott, you have Emmanuel Macron, you have Angela Merkel, you have Jean-Claude Juncker there. Will they be talking about Huawei?
Yeah, I mean, I think they will. And I mean, obviously, the technology aspect of the European, China, U.S. relations is very critical. I mean, I think what's important about this meeting also, I think we should be lost here, is that the U.S.-China negotiations are ongoing and look to be moving in the positive direction, again, from what we can tell. But very clearly, the U.S. is then going to turn its focus to the Europeans. And they've alluded to that, and there may not be that much political support for that in the United States, but that's clearly a subtext here. Yep. And so I think to the extent that we see a cooperative Europe-China relationship, that obviously is an important balance to some of these other issues we're seeing.
Scott, what is BlackRock actually doing with sovereign fixed income right now?
Well, I mean, I think, European rates are incredibly tough in terms of valuations. I mean, I would note that one of the things about European fixed income that's interesting is that the carry is very high because the funding rates are so low. Though even rates are at zero, the funding at being very negative makes the carry of European rates attractive. But rather, we look at U.S. fixed income and U.S. spread product, and we see some really attractive opportunities. Right, Tom? The yield of the U.S. ag is at 3%. And so if we're in a situation where monetary policy is on hold, and we're in a situation where the economy in the U.S. is slowing but still growing, and inflation is right at target, seems pretty attractive from a yield perspective. So for us, for fixed income, particularly in the U.S., yield is king here.